Hello and welcome to Worldline's LinkedIn Live session. In today's sessions, we'll be taking a deep dive into Worldline's newly launched India Digital Payments Report 2H 2024. To help us unpack these insights, we have with us two mutual leaders from Worldline India. Let me introduce you, Sunil Rongala, Senior Vice President of Strategy, Innovation and Analytics, and Ramakrishnan Ramamurthy, Chief Delivery and Operation Officer. Gentlemen, it's pleasure to have you here. Welcome.
Thank you, Shivangi. Good
Thank
to
you,
be here.
Shivangi. Thank you.
Let's start with something big. Yeah. Let's start with something big. Let's kick off things with the most talked about topics, that is UPI. Sunil, let me begin with asking you the question that numbers are staggering. UPI transaction grew by 42% year on year, reaching a massive of 93.23 billion. What do you think is the driving this explosive growth?
So actually, I had an interesting stat yesterday, which was three-quarters of all account-to-account transfers in the world are actually through UPI. So I think there are multiple factors for why UPI is growing. I mean, it's simplistic to say that just because there's zero MDR is the reason why it's growing. And I want to specifically look at P2M transactions, which is P2 person to merchant transactions, as opposed to P2P, which is just your regular individual to individual transfers, which is now actually powering UPI. And just a couple of years back, it was less than P2P transactions, but now it far outweighs P2M sorry, it outweighs P2P transactions. The number of transactions is probably about 70 to 75%, while the value of transactions is much lower than P2P, which basically indicates that these transactions that are being made through the P2M channel are being used for very, very small transactions like 15 rupees, 20 rupees, or 30 rupees. Uh, it has effectively replaced cash in a whole host of areas, and particularly in the urban areas, tier one, tier two, tier three kind of cities. I think, see, one reason is obviously there is an acceptance by merchant because of the zero MDR thing. But it isn't as simplistic as that. I think there's also been a huge acceptance from users like you and I for it. And one of the big reasons for it is the simplicity of its use. If you open up your Google Pay app, and I'm just using the name Google Pay, for any transactions below 500 rupees, if you use UPI Lite, it's as simple as just scanning the QR and pressing yes and putting the amount and pressing yes, and then it's done. Even in the case of above 500 rupee transactions, it's so simple where you just scan, enter your four-digit PIN, and it's done. So the ease of use has really, really been one of the big reasons why it's skyrocketed. And also, I think all the other kind of use cases that NPCI is bringing to the UPI in terms of where all it can be used, I think is also increasing the boom for UPI, and I think it'll just keep increasing over time.
Yeah, totally. I agree with it. I also take borrowing from the few pointer from what you said, the simplicity of the transaction and the ease of doing it. The P2P, I have one questions to pose to Rama. I can see that UPI P2P, P2M, that transaction have jumped about 50% in volume. So it's clear that UPI is no longer just about to peer-to-peer payments. It's also about transforming how merchants are doing business, as Sunil said earlier. Rama, what do you think, or what's your take on this shift? Can you just elaborate on it?
Okay, so I think I'll take on from one of the key statistics that Sunil highlighted, and also the trend that's been evolving in terms of the value of the P2M transactions, and there is a very important insight from two or three perspectives. One is, of course, adoption, like Sunil rightly said, for any, and I'm specifically talking about consumer behavior here. When you look at any digital payment adoption and the way it started, maybe say one and a half decades back, and then how the adoption journey started, it essentially starts with the financially literate who have an ability to experiment and then experience and then get to a maturity of adoption. What UPI has done with 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 the baseline scale of the financial literacy, at least when you talk about tier one, tier two, tier three, and with the boom of e-commerce that's happened, the acceptance of digital payment at a baseline did exist. What UPI has significantly led to an exponential growth is fundamentally the ease of experience as first point. So for every consumer to kind of accept a scan a QR and pay, and with smartphones being the order of the day, and you using say a scanner for reading up and many other things, the ability to understand that as a process became far simpler. So
Right.
hence the ability to accept that as a payment instrument. Second, also the way it has been canvassed and propagated across say in tier one, tier two, tier three. It is not limited to merchant ecosystems. Even if you see the non-established businesses, if it's the street vendor, if it's just say even the pan bidi shop on the corner, yeah, any hole in the wall practically has a QR and a sticker put out there. So what does this essentially mean? One is the consumer has accepted it as a mode. Second, the biggest challenge for digital payments to kind of take or go to the last mile was fundamentally the cost of acceptance. With UPI, you don't need any instrument or an acceptance infrastructure to be created at all, right? Practically, your phone could be the instrument in itself for both the merchant as well as the consumer. And that's got the adoption going down to the last mile. To what extent do you want to deal with cash? What if I can get money into my account straight away? Do I even need to manage a recon at the end of the day? Do I even need to manage a deposit into my bank the next day? It helps me monetize my own money far more significantly than what it could ever have done. I think all of these aspects together have contributed to the growth. And the reason that the P2M transaction values are small is practically you could buy a toffee for a rupee even through UPI, and that's the adoption that it has gone down to. So hence, that is what is taking UPI to the last line. One is consumer behavior, the experience, and the cost of infrastructure or setting up a payment system is practically next to nothing.
So, taking both the pointers, considering what Sunil said and what you are saying, the buzzword that I find is the convenience. The customer feeling it convenient to make the transaction easy and very efficiently without any hurdles or any of the problems facing. The latest thing that I think, which is very highlighted in our report, is about talking about soft POS technology. It is supposed to be expected to grow at 17.16% of CAGR from 2025 to 2037. So it means that any person who has a tablet or a mobile phone can easily do the transaction and work it as a payment terminal. What do you think, Sunil? It's how is it a big deal for a payment ecosystem as such? Mostly focusing on the soft POS technology.
So, see, there are multiple factors why I think SoftPOS will be the future. One is apart from the fact that we know what Rama touched on in terms of the infrastructure is zero cost for UPI. In the case of SoftPOS, right? If the merchant has a NFC enabled phone, and now NFC enabled phone, which one point of time were sort of limited to the high end phones, have all come into pretty much all smartphones. It's become part of the standard offerings of most OEMs. So, in that way, they're using a phone for the acceptance of transactions. Apart from that, obviously, the phone app, which is the SoftPOS app, can also accept other modes of transactions. The other reason why I think so, your cost of the assets, so asset light, it's just non-existent, or it's a fairly marginal increase. And the second one is the shift of standard from the CPOC standard to the MPOC standard, and that's sort of happening as we speak. And in that particular case, what happened previously was a CPOC was you could tap, but you could only tap till 5,000 rupees. You could not make any transactions higher than that. So literally, if you had to make 15,000 rupees, you had to tap three times, and in most cases, the issuer would decline it, thinking that it's a fraud. But in the case of, when you go to MPOC, uh, you have this thing of pin on glass also. Previously, you had to certify a CPOC separately, you had to certify pin on glass, and it became a very expensive proposition to do both. But now now with MPOC, it basically means that on your phone, on the merchant's phone itself, you can enter your PIN. So you can now make transactions that are above 5,000 rupees. So technically, you can use this for large white goods, and so the where this can be deployed kind of increases exponentially. And now you have different use cases for SoftPOS also. So, for example, if and because of this MPOP thing, and where you can accept much higher kind of amounts, you can use it for different use cases. For cash on delivery by the e-commerce companies, or for collection of your insurance payments, or just you're using it at larger at these retail stores for much larger amounts. So that removed the inconvenience that was there for MPOC. So in the previous case of when SoftPOS was generally deployed with the CPOC standard, the acceptance was fairly low because of those reasons. But now the 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 security has grown, the convenience has grown, the amount of money you can actually accept through it has grown, and the use case has grown. So there's only an upward path for SoftPOS as I see it.
Shivangi, you're on mute, please.
So, considering touching upon the traditional POS and the soft POS technology that Sunil highlighted, I want to ask Rama, what exactly do you think the other new possibility? Thinking about the delivery agents or the pop-up store, which are seamlessly accepting card payments without needing any traditional POS machines. The perspective or the impact of soft POS on the businesses on at the ground level. What do you think? What is your take upon it?
So let me start from the macro of why some innovation like a soft pause is very relevant, and the path to take for digitalizing transactions which are currently not digital. So one of the things to understand, while the digital payment ecosystem has grown significantly and keeps on growing at a significant pace in India, the cash in circulation is not going down, which fundamentally means what? There are still pockets of ecosystems which are predominantly cash only, which continue to prosper, and there is nothing that is being done around that space to say what is the opportunity to convert the cash to digital. And that is where I think this links up to what Sunil talked about. Is SoftPOS is not just about innovation of a payment acceptance device, but fundamentally it also comes with a positioning of digitizing the existing cash. And there are multiple use cases that can be talked about. So I'll take two specific reference points so that we understand why cash exists, or why a UPI also may not be able to completely solve the problem when even where a digital payment exists, which is why you need to shift to something which is say not UPI. Look at insurance payments for the moment. It is a completely agent-led model if you have not paid online for any reason. And uh, one of the largest ecosystems that is currently being tapped in by the insurers today is the rural insurance scheme, or for that matter, even if you look at what the government is driving in terms of rural insurance or farmer insurance that's happening. It is taking insurance down to the last mile because penetration is significantly low. For that ecosystem, if you have to pay an insurance premium which is going to be a 5,000 rupees, you may not necessarily have the ability to kind of pay it through a UPI. You might want to have a credit instrument to pay for it. Now, at the last mile, what the agent has is either you have an UPI to pay, or you give me cash and he collects cash and comes back. Now, what if at that point in time a credit card option is also available for a customer who is already having any ability to pay through credit? That's where the conversion of high value transactions can also come on here, and that reduces the limitation. Not only that, when you go down to the last mile, the challenge of operationally managing cash is very significant. This completely take that part also away. And the other bit to understand is it again does not require any investment in a payment infrastructure. It is embedded into the same collection app or the insurance payment app of the company. And that with a tap and pay can enable cards, can enable UPI, can enable maybe any other payment option that's available, including net banking. Could also use a link pay on a soft POS. So it opens up the entire gamut of transactions and also for the entire range of values that you might want to use on. So what's playing out, if you look at what we have mentioned in our report as well, high value transactions are on credit, low value transactions are on UPI. That game comes into play even at the last mile. That's one bit of it. The second important thing where a soft POS can actually become a driver for digitalization even in the last mile. Let's look at, say, a tier 30, which is a small village, and maybe a group of villages which is supported by a small market ecosystem. Today, nobody wants to go there just for the sheer ability to manage that remote location from a payment logistics perspective for digitalization. Now,
Yeah.
a software sits on the smartphone, which every consumer there has. That ecosystem is significantly led with only say a couple of banks. All the accounts are with those couple of banks only.
Yeah.
If that smartphone can be enabled within the same banking app for collecting other options as well beyond, say, credit cards is enabled there, net banking is enabled there, a link pay is enabled there, dynamic QR is also enabled there. The ecosystem of the bank is the consumer and the merchant are practically the same banker. So the money does not need to even go out of the system, and the cash can be safely deposited in the bank and monetized through digital payments multiple times. So not only does it support the, the, the digitalization of cash, it also creates a significant opportunity for cash to be sitting within the banking ecosystem as well. It solves a much larger problem of say, how do I reduce cash in circulation? And that is what can solve for significant amount of digitalization in the last mile, which currently is a challenge in terms of what's the option to look at there. Because everybody is looking at, I need to set up a digital payment infrastructure. It doesn't need to be set up at all with the software. Because the smartphone penetration has practically already gone down to the last mile.
Right. Talking about the last mile in a much profound way, we are talking about the cash being the efficient source of completing the last mile transaction before, and now we are moving ahead to the soft POS technology and much more in those nuances. Let me talk about credit cards for a moment. Often we are seen as a competing against UPI. Even yet in our report, the credit are usually usage is actually on a rise, especially for the high value transactions or completing even the last mile transaction that provide a seamlessness to the customer and merchant for both as such. So, what do you think is driving this trend with regard to the credit card? If you both can share the view and we can move forward with how the contrasting or even the commonalities can extend in that regard.
So I think I think there's never been a competition between so-called competition between credit card and UPI. There's been, I mean, I don't know whether you call it as a competition between UPI and debit card. Certainly, debit card transactions have been reducing the moment UPI has started growing, and it's continuously decreasing. And we see that. Over the past few reports, past few years itself, that's been the trend. Because if you think about it, right, using your UPI or your debit card, it's the same source.
Yeah.
So people are just using UPI more because it's easier and it's more widely. I mean, like what Rama said in terms of it's accepted across the board. If I go to my coconut seller, I just take out a UPI. So across the board, people are now using UPI and they're using less of their debit card. So there's I don't know if it's a competition or not, but because it's the same source. But in the case of credit card, it's fundamentally different because you're not paying for anything immediately, right? So
Yeah.
technically, you have a cycle of 50 days if you time it well, or at least have about 15-20 days to pay off the amount. So you have that. And in the case of credit cards, right? I mean, people obviously use credit cards to get some sort of the actual credit of it, so they can pay later. But through credit card also, you have this variety of the ability to do your EMIs, the ability to do. You get points from the issuers. That's a big thing. So the sort of incentive structure that has been built by issuers for credit cards sort of separates it out from UPI. And so there is in my view, the use cases. I mean, while you obviously use the same thing for buying goods and services, uh, one would use a credit card for one set of transactions and UPI for another set of transactions. And
Maybe
obviously, you've
another
seen
set of
this in the, yeah. So you obviously seen this in the case of credit cards, right? You use it for much larger transactions. I think it's about 3,000
yeah,
plus rupees on an average ticket size. While for P2M, it's about 600 or so. So obviously, you're using it for much larger kind of things, and you're using it for larger purchases with the intent of paying it later. And obviously, there's the miles and all of those rewards and everything that are included as part of that.
yeah. Rama, what about you? What do you think
Yeah,
about
so
the same?
I'll kind of alluding to the same thing. So it's important to understand one is at a very baseline, India is a significantly underpenetrated market as far as credit is concerned, right? So credit cards in that sense is one of the channels to improve the credit extension in India. So that as a fundamental pillar, and like Sunil rightly said, uh, the UPI is linked to your bank account and the money that you already have. Where credit
Right.
card is for money that you don't have but you still want to buy something so that you could pay it over a period in time. So one is affordability,
True.
other is money in the bank. So that at a fundamental level is a base difference. Whether credit in India is going to continue to keep growing, it will, because it is like I said, uh, uh, it's still very early double digits in terms of credit penetration in India. So uh, the uptake of credit cards will continue to happen for a period in time. And since it's about wanting to pay deferred payments, hence you will only want to buy high value items using your credit card, and then that's the reason you see the pattern to be clearly
Yeah,
different from the average ticket size of UPI to credit card. The other thing also to understand here is UPI is a digital good, right? So
yeah,
it's about how much of scale can you build in digitalizing transaction. Credit card is about how do you help consumers add to the discretionary spends. And for if you want to do discretionary spends, you want to do some purchase some luxury items, then it's about creating an affordability at that point in time so that he can go buy that commodity today rather than wait for the money to be available in his bank account tomorrow, right? So that also is another fundamental difference from a consumer behavior perspective in terms of what's the difference between a where is a credit card likely to be used, when is it likely to be used versus a UPI. So those fundamentals from a consumer behavior, market opportunity of a credit are going to remain for a long period in time. So uh, the divergence of use of a credit versus UPI will continue to remain. The opportunity for credit card issuance to keep growing in India will continue to happen. In fact, it is linked to one another. I would say the larger the number of transactions that happen through UPI, which means the larger are the number of transactions happening through a bank account, which
yeah.
makes you more credit worthy by default, and
True.
hence that is going to link back to have an ability to issue credit cards as well.
True. So, summarizing what Sunil said is we use the credit card only for the high transaction and trying to censor our own behavior for purchasing larger items. What do you both of you think? What is the future holds, or if you can predict what's the next big thing in the digital payment? Sunil, Rama, what do you think is on a horizon as such for payment, for fintech, and even for the consumer as such?
Shall I start, Rama? Yeah.
Yeah, go ahead, go ahead.
So I always find this the toughest kind of question to ask because, uh, who would have thought 10 years ago that mobile phones would be the center of our universe for payments? I mean, 10 years ago, mobile phones were literally for your WhatsApp and phones. Sorry, and making calls and messaging and etc. But literally, they are front, right, and center of payments right now. So I think uh, in the form of payments, in terms of devices or any such thing, I think there is a lot more to be explored through the phone. And I think for the next few years, and I would hazard a guess for at least a decade, there are still a lot more use cases that one can do through the phone. I think there'll be a lot more innovation through making payments. I mean, and from the user side, more frictionless. And so, how do you allow the payer to make transactions without having to? I mean, with the highest security, just without any sort of friction, make payments. So I think that's one potential use case, and I think you'll also see the cost of payments kind of going down just as the volume increases. So I think that is probably one of those things. But uh, in the merchant side, I would also say that we'll see a lot more focus towards embedded payments and the like that. And so, uh, y- in my view, the form factor as far as payments we can keep changing, but at the end of the day, it's how you can make the sort of transaction as frictionless as possible between the buyer and the seller. I think is what will continuously be focused on, because that sort of drives. And so, because if you think of UPI, right, the friction, removing the friction was one of the big reasons for this acceleration of payments.
Yeah,
And I think a lot more focus will go towards that.
true. I agree with you. Rama,
So,
what about you?
so the way I see it is first at the larger lens. Uh, what's the opportunity in the market?
Yeah,
So if you have to put that out, and like we're saying, the digital penetration in India is just about begun. We are, I think, at the level where we can say, and we can't say this for the entire population of the country. We can
yeah,
say this for a limited population of the country are now digitally mature. So for that set of the population, it's going to be about what's the experience that you can create there. And even in that ecosystem, while India is not, while we're talking about digital payments, if you look at the spread of digital payments in India, there is a fair share which is there on the ground, and there is a fair share which is completely digital commerce only.
yeah,
There is a significant opportunity for convergence to be happening there, and that's where, while we are talking about very early stages of omni-channel today, but in my view, the truest form of omni-channel opportunity there is going to be to say how can we bring a single unified convergence experience for any form factor of payment, whether physical, digital, whether the customer is in front of you or customer is not in front of you. I think that's one significant opportunity on the space that's already taken, but by helping to bring convergence there. Otherwise, there are practically two separate channels and two separate experiences running today for the space which is not taken, right? So what we have realized in the digital marketplace today from a digital payments perspective is the market that was ripe and available to be taken. The market that is not ripe and not available to be taken will require use cases to be discovered from two perspectives. One is what will it take to stitch for that ecosystem, and that could mean, say, just transit as an example. Say people travel the most by buses in India and by state transport buses in India. The
true.
payment is significantly cash only. So, can something like a SoftPOS or an embedded payment into a device for ticket issuance enable that entire journey to be digitized? That's an opportunity. So, it's a combination of taking digital payments and making it consumer friendly at the last mile, but also stitching the solution for what it will take to consume that market. So there is going to be a product, there is going to be a solutioning, there is going to be taking it to the last mile as part of the journey of the process, right? Of the sale or of the business. Same is case for say a COD. COD, you can choose to carry a device today when you're going in a city like a Mumbai. But if you have to take the ONDC use case there, which attempts to deliver it to say a tier 30, you can't afford to be selling a terminal there. You will need a use case like a pass, or
Yeah,
you may need something like a dynamic QR embedded into the delivery agent's app, right? So those are the realizations that will need to get done. So there is going to be two pivots. One is how does consolidation of the payment experience happen in the phygital world, both digital and physical, and bring it together, which is the omnichannel realizations, which are at very early stages. For the last mile, it will have to be product positioning to the use case. So I prefer to call that connected commerce. So you could take, say, state transport buses was just one ecosystem. You could have many such other use cases that could be designed. Say if it's a village panchayat, where in a village everybody is very comfortable dealing with cash, but again, can that ecosystem be digitized together and connect us to the same experience of a soft POS, a merchant as a soft POS, the customer as a QR? Why don't we connect the two ecosystems together? If we can connect those two, where he does his daily shopping, then we'll not mind paying the village panchayat also the same channel. So if we can bring, say, these three or four ecosystems together in a smaller village, then connected commerce is possible. So I think that's the way forward as far as these two diverse ecosystems are concerned. As the way forward for furthering the digital penetration. Let me put it that way.
So, in short, it's Sunil talks about reducing the frictions between the payment and completion of it. You are talking about untapping, driving into the untapped market, reducing down the potential of creating redundancies more often in the tier one and tier two city, and also tapping into those places where ONDC can be implemented in a much larger scale, where the reach is outnumbered by other solutions like QR codes and smart POS. So far, I can see overall from the way we had discussed so far, it seems that the payment is evolving at a much lighter speed and in a more profound way. And it's clear from our own digital report that the future cannot be something that we are waiting for, maybe something that is it's already there. We just have to step into it. So big thank you to Sunil, Rongala, and Ramakrishnan Ramamurthy for sharing the invaluable insights. For anyone wanting to dive deep into these trends and numbers, please be sure to check our Digital Payments Report 2024 2H. Thank you for tuning in, and we look forward to see you in our next live session.